Let's also check in on how Wall Street is trading right now. It's marginally in the green, but some weak data points on the jobs report front is rather weighing on Wall Street, and that's why you are seeing it only at those levels. It possibly may have been higher, but what we have is just a 0.2% in the green situation for Wall Street. Let's check in on the markets in Europe and Asia as well, and we've got our colleagues from Reuters, Kimberly Lim, who joins us from London, and Lisa Yuriko Thomas, who comes in from Hong Kong. Kim, I'm going to start with you. The Fed clearly didn't live up to market expectations. How are European markets shaping up today?
Well, that's quite right. And looking around the market, Europe's certainly off the rally from earlier in the week. Now, shares are hanging down south after the US Federal Reserve disappointed investors late yesterday by not announcing a more aggressive form of monetary stimulus. The Fed did extend an existing bond program aimed at bringing down long-term borrowing costs and stimulating growth, but this was already, for the most part, largely priced in. Now, adding to that disappointment and fanning the worries about global growth, more disappointing macro data out of China and Germany. Basic resource shares looking like the worst performers after China's factory sector contracted for an 8th straight month in June. The worse than expected manufacturing numbers out of Europe's largest economy, Germany, also weighing heavily on the German DAX. Take a quick look of currencies. The dollar is up against the euro and other riskier assets. Also weighing, of course, on the single currency there, Spain, considered right now by many Europe's next weakest link. The country saw medium-term borrowing costs hit euro-era record levels at auction earlier. Now, later we will see an independent audit on just how big are capital holes in Spanish banks, and that will certainly be a focal point for the market. Of course, Eurozone finance ministers will be meeting later to discuss the €100 billion rescue loan and just how much Spain will actually need for its banks.
All right, let's take it to Asia, and Asian stocks struggled after weaker than expected stimulus measures from the US Federal Reserve. Walk us through the details.
Asian investors were disappointed today. That's after the U.S. Federal Reserve stopped short of a third round of quantitative easing. The $267 billion extension of Operation Twist just didn't do the trick. Hong Kong stocks ended lower. One major standout was Chinese property developer Evergrande. Shares of the company slumped by as much as a fifth because of a short seller report. Evergrande has denied the allegations, but we'll keep watching that stock. One stock index that did buck the trend was the Nikkei. It ended up nearly 1%. The Fed's measures weakened the yen, and that helped give stocks there a boost. Most analysts and investors say we should expect more quantitative easing out of the U.S.